What's up, money lovers? Welcome back here again today with Tim for episode 3 of the Oracle Investment Club. How you doing, Tim?
Good. How's it going, Vin?
Pretty good. So, I know you just went to the supermarket. How's the inflation looking there? Did you feel it?
Oh yeah, it's disgusting. Yeah, my groceries normally 60 to 70 bucks, and now they're like 70 to 80 and pushing higher. It's not pleasant.
Yeah, I know we got the CPI data this week we're going to talk about, and yeah, it just seems like these days the only thing mooning is going to the moon is gas prices.
Oh yeah,
S&P down almost another 3% this week, so another
yes.
brutal week.
God, it's like if gas prices weren't going up, you could take it extra money and put it into the stock market, but unfortunately, you got to put it into your gas tank.
Yeah, unfortunately, I'm sure those rising gas prices as we get closer to $6, $7, you get more eager to get that Model Y.
Oh my God. So actually this week I was like, you know what, let me throw in FSD. And I heard that they're prioritizing FSD models. And I'm like, let me at least bump mine up so I can get it sooner. So I changed it and I put in FSD, and they all of a sudden sent me a text and said, hey, your car's ready for pickup next week. And I'm like,
Wow.
I'm, I was like, I want it, but I'm not ready yet. I was like, I got to buy a house. I got some other things to do first. But it was crazy to see that they bumped it up that fast. Now, the next day, I had actually taken FSD off because talking with my buddy, I realized that for the purposes that I was getting FSD for, we're going to be utilizing it for a robo taxi in the future, getting myself some revenue. But that's not for at least 3 years. He's like, you could take that 10 grand and put it into Tesla stock and turn it into 25 grand or more. So I was like, all right, that's a great point. And I could toggle it on and off if I just want to play around and make some FSD videos and do it for a month. I can totally do that. So that's what I decided to do, but they left my delivery date to the same. So if you're trying to cheat the system and you want it early, throw on FSD, and then as soon as they give you confirmation, just get rid of it.
Wow,
So
look
for
at
anybody
that.
out there
So
looking for that, that's a little trick. Plus, if you reserved it before they increased the prices of FSD, you're grandfathered in because my FSD was only 10 grand.
that's very interesting. So even if you do wait till a later time, same price still?
For me, it was so, and I don't know because just reading through the fine print, I put it on. When I took it off, it said you can no longer make any changes to this. But then it went back in again later, and I can add FSD. But I don't know what the price of FSD is because I don't want to play that game and go back and forth. But I reserved mine my birthday of last year, so in November of last year, I reserved it. And when I put it through, that FSD still cost me 10 grand. So that's in case anybody else out there is looking to do that, you're probably grandfathered in.
That's really interesting. Yeah, and I mean, I was reading about how they're prioritizing the FSD cars. It makes sense because they'll get a higher profit margin on them. Especially,
Yeah.
it'll kind of offset while we're waiting for the endless delays here with Berlin and Austin, but they're getting there. But obviously, that's
Oh,
going
no
to be
kidding.
burning some cash for the time being.
Oh yeah, and I'm actually curious because with them prioritizing FSD, I wonder if they're going to use the deferred revenue during the next 2 quarters because they know margins are going to be low, or what they're going to do. Because I don't think I want to say that I read somewhere that the stipulation was is they can't recognize that deferred revenue until FSD becomes actual reality. So I don't know if that's even a possibility for the next 2 quarters, but I will find out for sure. I've seen margin predictions all over the place, anywhere from 22% up to 32%. So we'll see how that goes.
Yeah, that should be interesting. And that next quarter report's coming up pretty quick, actually.
Oh yeah, should be end of April.
So, what do you think? Kind of touched on CPI. What do you think? We near the end of the tunnel, or is it just going to keep running?
It's going to get worse. Being in retail myself, I've been in retail for 15 years. I started actually in Home Depot right before the housing market crash. So I've seen this cycle go through. Prices go up, and of course it stinks because anybody who's out there, actually a working human being, you're not going to get wage increases. Always lag actual inflation, and they will never catch up to it. Very few employers are offering, cost of living increases. So chances are you're going to see inflation go up 8%, your pay may go up 5%, and it's always going to weigh behind. So like inflation goes up, your cost of living goes up by 15, 20%, and then maybe within the next year, you're going to get a pay increase that still doesn't make up for the last year's worth of inflation. So unfortunately, that's just another way that we separate, wealth. But that's also the reason why I invest. For those of you out there looking for a way to finally get ahead, you do have to sacrifice all these things. Where, like cut out your coffee, cut out these expenses. It's true. I mean, it stinks. We're in a system that we have to do that with. But if you cut your expenses down and you can invest a little bit, even putting them in index funds, you're going to be getting 7 to 8% growth, and that's way more than you're going to get from your employer or anywhere else.
Yeah, definitely puts you way ahead of the game. I think I forget what the statistic was. If you're, I'm gonna be off, but it was something like maybe if you have 10 grand in your bank account and like no debt, you're ahead of 90% of Americans. I got to double
Yep.
check, but it is crazy. Yeah, it's so true. That $5 Starbucks every day. At the end of the year, that's $1,500 that you could. It's better than nothing if that's all you can afford. It definitely starts to compound, pretty quick, and that's what I'm always trying to tell people.
Oh, I know. Yeah, and you're right. That I don't know what the stat was, but they went through, and the average net worth of most people is negative. It's in the negative, and
Yeah.
it's disgusting because I finally got myself out of the negative last year, and I actually turned it around pretty quick. So for those of you out there who are pushing and are struggling with this, and you're getting frustrated because you just can't seem to get ahead, keep plugging away. It took me 10 years. I got out of debt, and once you hit that turning point, it turns fast because I went from being it took me 3 years, and I went from being 60 grand upside down to now I have a $75,000 net worth. So stick with it, and it turns around real fast.
That's incredible. Yeah, definitely good for you. And you'll definitely, another 3 years down the road, like the compounding is going to be pretty crazy on that.
Oh yeah, yeah. Because as soon as you have no debt, all of that money that you have now becomes money that's making money for you, and that's a huge significant change. And even in a down market, like my net worth has basically stayed the same all year long because my portfolio is down 15%. And most of my net worth currently is tied up in either stocks or my 401k. So of course it's fluctuating with the market, but I'm still there and I'm still investing. So when we do get out of this, that's going to just blow up even faster.
Yeah, definitely. Hopefully we get there soon. I know we had the Rivian earnings this past week. Did you take a look at that at all?
Oh man, and it's funny. Everybody asked me when it first IPO'd, they're like, "Well, what do you want to do? Are you going to buy it or not?" And I go, "The only reason I would buy Rivian when it IPO'd was strictly for that momentum run. That was it." I go because I don't know how high it's going to go. I figured it would hit 120. It ended up hitting 170, but I was like, it's going to come down to at least 60, if not lower. And of course, with the whole macro environment going as crazy as it was, now we're sitting at like 38. But yeah, I was not expecting anything from Rivian more than a momentum move, and even now I still think it's overpriced. I think $25 to $30 is probably a more realistic price at the moment, and then it's got to prove itself. It's at the point where Tesla was like 10, 15 years ago. Now, granted, Rivian doesn't have the same total addressable market as Tesla does now, but even if you go back, when Tesla first started, their real only addressable market was the automotive electric vehicle industry. And now that market's larger, so Rivian has a better way to go, but they do have actual competition now, which Tesla didn't. So, it's kind of up in the air. I'm still rooting for them. I still think they're going to do well. Having a partnership with Amazon helps, even though Amazon, doesn't have an exclusive partnership, so they can go to anybody else. They still have it. So, I'm rooting for them, but I don't see anything coming out of them for a while.
Yeah, I agree with you, everything you said there. And I was just, reading, combing through the report this morning, did a quick video on it. And it's just interesting to me. They highlight that their goal is to deliver 600,000 vehicles. They did under 1,000 last year. And, it just prompted me to look up like Tesla's history. 2012 was when Tesla launched the Model S. They sold 2,000. Then they
Yep.
sold the next year, I think 20,000, and their goal was, maybe 25K. Anyway, lo and behold, it took them 10 years to get to the point where they were selling 600,000 or more. And, so I think Rivian is, I wish them all the best, but yeah, it's going to be much harder to get there than they're thinking. And the other thing too that was interesting to me is they have 3 models already that they're producing. Tesla had a hard enough time with just the one. So it
Oh yeah.
really makes me wonder, like, do they have any chance? Like, it's gonna be, the odds are stacked against them to really, get to that volume production.
Oh yeah, and they're burning cash like crazy. They're burning the same amount of money as Tesla does. And it's like, that just shows that Tesla is that much further ahead. And I mean, I would still like to go back and see what Tesla's costs were back when the Model S first came out, because maybe they were high back then too. I don't have those stats in front of me. So just being realistic, looking at it, so Rivian, their numbers are basically the same as where Tesla was in their first year. So 1,000 in their first year, they're looking at 25,000 this year, which is basically the same as what Tesla did their second year. But then, you remember 5 years later, they came out with the Model 3 and then the Model Y. So if Rivian can have a model like that that's going to be more mass adopted, then great. And they at least are coming up in an environment where EVs are a reality. There is an EV market. So they've got that in their favor, but they've also got GM, Ford, Lucid, everybody else is coming out with vehicles as well.
Right,
So,
right.
they've got both sides of the coin, but again, like you said, it's going to be minimum 5 years before Rivian gets themselves to a point where they're actually out there. So if they can get through and they can actually produce, then good for them. Obviously we know with what's going on with Ukraine and Russia and oil and gas prices skyrocketing, more and more people are looking for EVs. So the demand's going to be there. I don't doubt it. So whoever can produce the most is going to make the most.
Definitely, yeah, and the oil, everything. I was reading how, Tesla's, orders are going up now. It's obviously gonna push people into electric vehicles, so good for the industry as a whole. But another issue with Rivian, they mentioned, like, 20 plus times it had to be on the report, supply constraints, and it's like, they're hurting from those already. That's only gonna get worse when you've got 30 other car companies, competing for the same battery resources. And again, I just think, like, this is another advantage Tesla has on them, kind of already having thought ahead or been around long enough to realize this, that their supply chains should be pretty solid for the next couple of years, hopefully, while everyone else has to struggle a little bit more.
Oh yeah, I mean, I look at being in retail. Obviously you build relationships with your vendors, and the vendors that you've been dealing with for a while. You make a couple of phone calls, and you usually get those little bit of favors here and there, and you usually have pricing locked up well ahead of time. So Tesla's been doing this for all over 10 years now. So they have locked up supplies with vendors that they have been dealing with for over a decade. And so they've got great relationships with them. We talked about it. They had a nickel deal that went through, actually two of them that they had last year. One I think was in like March or April, and the other one was later in the year around October. But they locked up massive deals for nickel and other supplies and lithium before everything went up. So they have pricing locked in to keep their costs down with vendors that they've been dealing with for over a decade. Whereas everybody else, even legacy automotive makers, they don't have that supply chain coming in. They don't have the vertical integration. They don't have the same relationships with the vendors. So everybody's going to be lagging.
Yeah, and then when you add to that, Tesla thought ahead, and I thought, on Battery Day when they announced that they had these breakthroughs, better ways of making the batteries more efficient, using more nickel base and less, things like cobalt. No one at the time, like, they weren't rewarded for that. Like, the stock should have shot up, but of course it doesn't. But that's just another area where, like, they've thought ahead. They've gotten it to, better, raw materials that can be acquired more easily, while everyone else can't say the same. They're going to be struggling to, like, get these required resources. And then, another issue I noticed with Rivian from the report was, like, their starting price, I think, is between 67 and 83,000, and the vehicle is probably not as good as a Tesla as far as, performance and range. And even if, sticker, the range might have said like 360 miles, but the reality, we know a lot of people have been very unhappy that they're getting much less range than, it said on the sticker.
Yeah, and looking at where they're at compared to where Tesla was at, and my gosh, and also looking at Rivian and the pricing. They wanted to crank the prices up. Obviously, got a lot of pushback for that, and it's pushback that obviously they turned that back around, but they still pissed off a lot of people. So you know that they're already losing money, major money on every vehicle they produce, and they're going to be losing money until they get through all of these initial pre-orders to then be able to crank the price up, and then they're going to lose the demand. I mean, the demand will still be there, but when you got to push the price up that much, people are going to opt out of buying it.
Yeah, and I know they had the 83,000 pre-orders, but I mean, I wonder like what year, how long from now do you think it'll be until they're producing 83,000 vehicles?
Oh yeah. So you figure, they did the 1,000 this year. They're going to have, they say 25,000 this year. So if they continue that ramp, I would imagine by the end of 2023, they'll be through all of those pre-orders. But still, then you're looking at, now we're getting into 2024 where maybe they can start producing vehicles that are maybe profitable. So how long is it going to take before they dig themselves out of debt to then become an actual profitable company? I mean, I haven't run their numbers yet, but just looking at how Tesla did it, I would imagine it's going to be 10 years before they become profitable.
Yeah, I mean, and I look at Tesla's chart, like from the first year the Model S was out, 2012, it took them about 6 years to be producing 80,000. And I wonder how much of that, they were the first ones to do it. So maybe better ways are known now that like maybe they could do it a little bit faster, these other companies like Rivian. But at the same time, who knows? We know Tesla barely made it, without going bankrupt. So the
Oh
odds, I
yeah.
think, are still stacked against the competition.
Yeah, and you think about like what Ford is doing. Jim Farley recognizes that Tesla is the way it's got to be. Tesla does it better than anybody else. They literally created the way to do it, and the best any other company can do is try to at least mirror how Tesla is doing it to become so vertically integrated. But can they actually get there? None of these companies even know what it's like to just be vertically integrated like that and not use third parties all over the place. The amount of time and money that was put into creating Tesla as the way it is today, it can't be done overnight. So these companies, even the legacy automotive makers, are going to have that struggle of trying to create that from scratch.
Definitely. You know, and we're seeing the nickel shortages too. Like this is not going to help. Um,
Oh yeah, and then
obviously,
Tesla being brilliant, somehow looking at the future and knowing, hey, let's switch to lithium iron phosphate, and hey, we don't need as
yeah,
much fuel anymore.
yeah, exactly. And I was reading a couple other interesting statistics the other day. Obviously the other materials and batteries are also in high demand. We've got all these supply chain issues. Tesla thought ahead; they secured their supply chains. And then I was reading 80% of the world's lithium is mined in Australia, Chile, and China. But China controls more than 50% of the world's lithium processing and refining facilities, and they have three-quarters of the world's lithium ion battery mega factories in the world. So I was wondering, like, what do you think? Is this going to lead to some issues like we're seeing with the Russian oil dependence right now? I mean, China's basically got a monopoly on the batteries and the
Yeah,
processing. And
it's tough, and I mean, obviously, it's great that CATL is putting up a battery factory right next to Tesla to produce batteries literally for Tesla. But when you look at what Russia's doing with all of their businesses in their country and nationalizing it, that happening in China is a concern. But hearing China's reaction to what's going on with Russia, it sounds like they don't want to go that route. It sounds like while China does want Taiwan to be part of China for real, I don't think that they're going to put themselves in a situation where the whole world puts sanctions on them and shuts them off.
right, yeah, and another thing that's interesting too, I forgot Tesla. They're they use so cobalt is the most expensive part of the battery. It costs more than the other four main metals put together. Tesla uses less than 3% cobalt in their batteries. They're getting more and more away from it, and they're even producing some cars cobalt free. I don't know what
Yeah.
Rivian's doing.
Yeah, that I don't know. And I remember reading articles a while back about the cobalt, and it's one of those. Once Elon had recognized, how the cobalt was being mined and the conditions that they were in, that was one of the reasons why he wanted to pull away from using cobalt. And obviously, with less and less people using it, then you're going to have the prices of it go up anyway. So it's a better idea for them to get out of that. But yeah, I'm curious as to the battery makeup of all of these other EV makers.
Definitely, yeah. So I see more and more of the recession talk we're getting. I mean, the market keeps sliding and inflation keeps going. What do you think would happen this time around if we did have another recession? it seemed like during the COVID crash, I know it was kind of like a fake out for, that we weren't really in a bear market for very long, thanks to the government intervention. I don't think we can count on that this time. So this time around, if there was like another, recession, bear market, do you think we would see the same kind of thing where Tesla and these other, innovative type companies end up growing and taking more market share during the recession, or what do you think will
Um,
happen?
it's gonna be tough. I actually just did a video last night on a recession coming, and again, being in retail, I'm seeing what's going on. I'm seeing all of our prices going up. I'm seeing our customers getting more and more frustrated with it. But they're like, but people are still willing to pay. But eventually, we're going to hit that point where people's money has run out. We've talked about it, on my channel with retail investors just running out of cash to invest in buying the dip. So that's what's going to happen in reality for people who are buying houses and goods and all sorts of stuff. Eventually, they're going to run out of money and be like, "We are done spending." And a lot of people and retail suppliers, producers are going to be sitting on a lot of expensive inventory, and that's where we're going to hit that recession. So the people who are going to do the best coming out of it are the ones who have great pricing on their inventory, making sure that they have inventory, and being able to keep that demand up. So obviously, the companies like Tesla, who have gotten themselves a bunch of supplies at a good low price, they've got plenty of inventory to get through this, and their demand is still there, and they have a lot of pricing power. Pricing power is going to be huge to get through this recession. Whoever has the pricing power is going to win. That's Tesla. Obviously, the FANG stocks are going to be there. The startups and the higher growth companies that did extremely well after COVID, they're the ones who are actually going to struggle, I think. The ones obviously who have the pricing power are going to do fine. But when everything is depressed, everything's going to be depressed. Nobody's going to actually do well during the recession. It's a matter of who's going to do the best coming out of the recession. And companies who are high growth, don't have profits, don't have themselves a good footing, might go under. I think we're going to see during that point might be a lot of companies either going under or getting bought out, because you see stock prices super low right now. The valuations of companies are down. They're looking prime for the pickings for these big boys who are going to go out there and just start scooping them up. So I think we might see some buyouts. But I do think the recession is actually going to be a good thing for the market and for the economy. Looking at where we're at with, we'll know better in a couple of months, but looking at where we're at with inflation, interest rates are about to go up. I don't know if interest rates going up are actually going to keep inflation in line. It is just so high right now. And if the Fed pushes rates too high too fast, they're going to burn us out. So they're kind of stuck. So I think right now we're kind of at a point where they might be hoping for a natural recession to happen rather than a Fed induced recession. Because if that happens, it may just be 2 quarters. It might actually be a silver lining, maybe something good that comes out of it, and maybe actually a good recession to kind of give us a little bit of a reset on inflation and then come out.
Yeah, definitely. And a lot of the indicators are, in line with that. I mean, the VIX is going higher and higher. And then I saw something else about how every time we're basically there right now with the rise in crude oil, every time we've had a 50% rise in the price of crude oil, it's led to a recession.
Yep.
So yeah, definitely not looking good. I also do wonder, like you said, like, yeah, the newer, not profitable companies are in trouble. But also I wonder, um, if it is another scenario where innovation thrives or comes out of it stronger, let's go with, I like that better. um I wonder how that affects, like, your legacy automotives who are stuck with all this debt and are going to have to take on more because they can't sell the inventories that they already have. If the used car market prices are not affordable anymore, they can't sell the old cars. I know that's what's been popular. Now they can't sell the old ones and they can't sell the new ones. I mean, they're going to be in deep trouble with all the debt they already have.
Oh, I know. And like my car, so I'm assuming that used car prices must be coming down. When I put in for my car to trade it in for Tesla last month, they were offering me $10,000, which is crazy because I have a very base model Honda CRV with 170,000 miles with bullet holes in the back of it, and and they were offering me 10 grand. Now this month I because it only lasts for a month. It's only good for a month. So this month it was 8,400. So it came down significantly. So I'm assuming used car prices, but I also don't know if that's because it's a gas car and gas prices are now higher. Um, but so those prices are coming down, but you're right. So anybody who's sitting on a lot of debt could be struggling because I think during the next year and a half, we're going to have a lot of investors, a lot of people, the whole entire world is now looking at how dependent we are on oil. And we're going to see this great reset going on. We're going to see a great just change in a view. And I made a video about the energy revolution, which is basically like our industrial revolution that went on, 120 years ago. So we're going to see that's going on. It's going to be such a huge, massive shift that we're about to go through. And those companies, I think, are the ones that are going to do the best coming out of this. Whether we hit a recession or not, people's eyes are opening up to what's going to be going on in the future. And if you're going to be investing yourself into a dying, industry, it's not going to do well for you. Oil right now, I think it's on its last hurrah. I think we're going to see this last is the big spike going on, and after this, there's going to be so much money getting pumped into renewable energy that that's where you're going to want to have your money. Anything having to do with renewable energy in the future is going to be huge.
Definitely. So what else? We had the Amazon
Oh,
split this
Amazon,
past
yes, I
week.
was going to say.
Buying any Amazon shares?
Not yet. So I was dollar cost averaging. God, it had to be about a year ago. I decided I was going to put like a dollar a day into Amazon, and I had been doing it, and it was doing well. And then after the last earnings, I was like, I never got anywhere. It was just falling apart. I was break even, and I was like, I didn't have a lot of money in there. Like I was expecting a split. They didn't split. Their fundamentals were just still kind of rocky. I really wasn't sure. So I wanted to free up cash because of everything we were going through in the macro. So I sold it off. And then, of course, they split. But I accidentally had like a dollar still go into it. So I just sat on it. I think they're going to end up being like Google, though. I think because the split is so far out, we won't see a run up into the split until probably a month before. So maybe like the beginning of May might actually start to see the run up going into that split. But until then, actually, the price might come down. So there might be some decent buying opportunities to get in. And I might do it. I might switch it back on and get myself, a little bit kind of like with Google. I'm trying to get myself to enough where I have 1/20th of a share so that when it splits, I'll have one full share. um, but for me, it's more of a playing around because I don't know. For me, it's educational. I don't know if when you have a fractional share and it splits, do you keep it all? Because I know sometimes with fractions after a split, you just get paid in cash for where the fraction is. But
Yeah,
I've actually never been through it.
I think it depends on the brokerage because yeah, I've heard both ways. Like you should just get 20 times or whatever the post split amount would be. But yeah, I've
Yeah.
also heard that sometimes they do just give you the cash instead. I think it's broker by broker.
All right. Well, hey, you know what? By the time June hits, I will know, and I'll have an actual answer for whoever's on SoFi. I have SoFi for my fractionals, so I'll know at that point.
Yeah, and I bought some Google right after they announced the split. That's when I'd had on my watch list a long time, and that was kind of the cherry on top. I was like, all right, time to pull the trigger,
Oh yeah.
and probably down 12% since I bought it already. So yeah, definitely. I'm not really expecting a run up in Amazon's price anytime soon either, especially until we get some good news.
Oh yeah. Yeah. And looking at it is like obviously we know these companies are both going to do well long term. So, typically with a split, the stock will run up into the split, it'll split, and then it'll sell off. And usually it sells off back down to where it should have been before the euphoric run up into the split when everybody wanted to get into it. So, that's the timing of it is when it first starts to run, get in then. After it splits, just wait, let it cool off, and then get back in at that point. So those are the two entry points I'm looking for to get into them. And then after that, I'll just monitor them. I'll see how it's going because a 20-to-1 split's big. So after that, I don't know how much they're going to grow. They'll probably end up growing like Apple does, which is not a lot, but it'll be still a much better steady place to put your money in times like this. Those are the stocks that you want to be in. And then, then after they split, Tesla will be the largest mega cap, the highest priced mega cap stock out there. So who's next to split? We know.
Yeah, that would definitely be big. I think they would get a probably the biggest reaction of like all the big tech companies announcing a split. Tesla would be going up quite a bit, I think, after because I don't know. I feel like maybe it's just me, or it just seems like the consensus out there, like people are just more excited about a company like Tesla than, Google, Amazon, even though
Oh
they
yeah.
are all great companies.
Well, I think two reasons are: one, it's because Tesla with their product, it's very similar to where Apple was when they came out with the iPhone. So there's just so much more excitement about the product itself. Nobody's excited about, ooh, Amazon product. It's,
Right.
just it's totally different. You're not driving an Amazon, you're driving a Tesla. So you've got that whole entire, fan base behind it all. Plus, Tesla right now is at the early stages of their S curve. So it's still exciting to a lot of people, whereas Apple still has their fan base, as far as the stock goes, it's just going to be the steady climber. Tesla still has that S curve to go through, plus potentially three more S curves to go through. So, they might get this again when the Tesla bot comes out. Who knows?
Yeah, definitely. Then that's exactly it. These companies are in mature growth phase or just, mature. They're not going to be going up 50% a year. They can't. I mean, they're all very strongly positioned and they're going to do great, but yeah, just the growth is definitely they're past like their mega growth stage. And I'd agree with you. Like Tesla's just gotten multiple exponential growth opportunities that we're about to witness happening.
Oh yeah, yeah. And one of the guys in my comments, we were talking, and we were chatting my thoughts, and I made a video last October saying that I'm expecting a split going to come around Q3, the end of Q3 of this year, and it's going to be 5-1. After seeing what's going on, seeing when Amazon or Google are going to split, I'm like, maybe they're going to do another split, same time as they did the last time, as a 10-1. And if they get up themselves up to, over $1,000, they do 10-1, they bring it down to $100 per share. Like, that's a potential possibility for the summer. Thinking about the timing, I'm asking myself, why did Google and Amazon both decide that June and July were the times to split? We're in an economy that's obviously high inflation, interest rates are going up, a lot of uncertainty, a lot of, just negativity going on in the market. Why would they feel comfortable splitting at that time? So just little things that, just little questions that pop into my head that I obviously don't have answers for, but just like leads me to believe of, maybe there's something going on that we don't know. And maybe, like Chicken Genius had his video, said he's expecting that, second bottom to come in May. And I'm looking at it and I don't know whether it's gonna be May or not, but we might see a minor rally going into the summer before we get midterm election sell off.
Yeah, he's great. He's always I love his channel. He always seems to call it exactly right, the bottom, the top, like he's really on the ball. And yeah, I think you could definitely be onto something there. I mean, maybe they see the light at the end of the tunnel and, a few more rough months and hopefully things will get a little better.
Oh yeah. And one of the things that I had mentioned on my video too was, you look at computer algorithms, they're doing 98% of the trading that's out there. And they compute so quickly that when they see numbers, they see inflation. And, we've been kind of seeing like step downs along the way. We're like, all right, well, inflation's going higher. So the whole market takes a couple of days, it steps down to a certain point, and then we consolidate. So that's how quickly the market works with the algorithms because they see the data, they factor it all in there, and it comes down to a certain point, and then we trade at that level. So I'm wondering if we're going to see that data coming through, and maybe in May, that's where we actually peak with inflation. And then once the market knows, all right, we've peaked, we're going to take the corner, and now we can actually pull out of this, and the algorithms will take that into account. So I'm wondering if that's how it's going to play out. Again, we obviously won't know, but
Yeah, could you never know and like, just keep continued dollar cost averaging. It's all you could do. And
oh yeah,
yeah,
uh,
it's gonna work out long term, definitely with
oh
companies like
yeah.
Tesla.
I'm definitely not playing the
Meet Kevin game.
Yeah. Oh gosh, no, no, because I don't have time to watch the market. I'm working 60 hours a week at my job. I'm there from 6 a.m. to 5 p.m. So there's no way. Like I can occasionally jump on to see where things are at for my trick. In case anybody out there is curious as to how I can manage to do that, set alerts. Most of your brokers, you can set alerts on your phone for prices. So at least if you could set alerts that hey, your phone goes off and says, by the way, this is now at this price, that's how I do it. Or I set, limit buys and sells to at least stay and let the market trade for me while I'm at work. So that helps.
Right. Yeah. And I'm just amazed that you can still you get those two videos out every day. Like, how do you do it? And just finding so much to talk about every day is incredible
Oh
on your
yeah,
part.
yeah, and I mean, like I'm up. You got to work hard. There's no two ways about it. I mean, I am up at 3:45. I hit the gym. I get myself ready for work. I hit the gym, go right to work at 6. Get out at 5:15, and then I'm home and I just fire up 2 videos. And like over the course of the day, it's just I'll be on Twitter. I'll check different notes. I see different things that are going on. I watch a video while I'm driving, so I can see it's either I watch Tesla Daily every day. Stephen Mark Ryan, Meet Kevin, Chicken Genius, all of them. I'll throw it on there. Dave Lee, the Investment Club, of course, and then and then and and I watch all these videos and they give me different ideas, and then our conversation here, and then I can just kind of put it all together. I take notes on my phone, and just at the end of the day, I'm like, all right, well, what was going on, what was being talked about, what are my thoughts on all these different things, and then I turn on the camera, and then my mouth just goes.
That's awesome. Yeah, keep it going. We're all loving your content.
Excellent, thank you.
Um, what else we got here? So I was listening to Ray Dalio's got a new book about like changing world orders,
Yep.
and he basically says that the United States is in its declining phase, and he just models it after all these similarities between the Dutch Empire, the British Empire, and we're at the point now where we're declining, China's going up, and we're kind of at the inflection point. What do you think? I mean, if you think that that's the case, how do you invest accordingly? Like in the future, in our lifetime, do you think that there's going to come a time when you're better off investing outside the US, or do we have a unique system here that's just going to keep thriving?
Now, unless something changes, I think he's right. Whether we're going to see that actual fall of the United States during our lifetime, I don't know. But I can definitely see China passing us. They have the ability to do it. They've got the manpower over there. Heck, I remember even, man, 15, 20 years ago, my ex-father-in-law, he was a big business guy, and he said, learn Mandarin because they're going to take over eventually. Like it's no doubt about it. They're going to get there. They're going through, I think, their last real downswing right now, but they're still in their infancy of a global, economic win of who they are. So I think right now they're in a place where they're still finding their footing, basically, kind of like where we were before World War I. So I think that's where they're at, and I think the problem is the whole Western civilization has put such a negative view on China and how they do things. And whether you agree with them or not, obviously we hear some horrible stories coming out of there. Um, that's they are who they are, and they're learning a lot of things. But I think coming out of it, they will be a global superpower for sure.
Yeah,
Um,
and just like yeah, aside from like what people may think of them, the reality is like that government runs the country like a business. They operate
and,
on a 20-year plan where every single thing happens for a reason. There's no 4 years of one thing and then in the next 4 years they erase everything, and like they're thinking long term. Like they're like you need to with investing. They're on a serious long term plan. The only saving grace I think maybe we could have is that the United States financial system is just more appealing to companies to operate in. Obviously, we're seeing China's crackdown on Alibaba, and the big boys are really suffering. Value investors are crying themselves to sleep as they keep buying the dip that never ends with Alibaba. But I mean, that's like maybe the hope I could see, or I definitely think we do need to do more to stay competitive with them. And how better to stay competitive? Stop trying to hold back Tesla, and our innovators, and like give these companies the recognition they deserve. Yes, like let's make sure we're doing everything safely, but not just spreading FUD. Like let's like be real here and like give them the chance to compete, because at the end of the day, like I think they're one of our only hopes with competing against China, or we're going to be buying all Chinese cars in a couple of years.
oh yeah, I think to me what it comes down to is, and obviously it goes based on everybody's beliefs, but I mean, it's really no secret that it's corporations that actually run the country. And as long as corporations have the ability to pay off our government to give them the regulations that they want to be able to thrive here in the US, the US will be fine. Um, but as soon as that changes, then it's going to be gone. And I think the problem is we're getting enough people who are starting to get frustrated with our current two-party system, where as soon as we break out of that, and we saw with Trump and his reign, and the way I looked at him was I don't like politics to begin with, but if he just knew how to not be a guy who he was and speak the way he did, I think it would have been good. I think a lot of the things that he implemented were very good for the company from a business standpoint, from a financial and economic standpoint. I think he did a lot of great things. And I think that the problem that a lot of people had with him on the corporate level were because he wasn't going to bow to anyone, because he didn't need their payouts. He didn't need any of that. He did it on his own. And obviously now we see with Biden that everything is controlled by the UAW, and that's what we're going to run into. So if they end up getting somebody in our government who is not on their side, that could be the downfall, because then we might actually see regulations get put in place that can keep them under control. Might actually see the government, we don't have any more lifetime politicians. There could be, if we see those changes go on, I think it'll be good for our country and the economy, but it won't be good for the big businesses who are controlling everything. So it's kind of a double-edged sword.
Yeah, definitely, and it's interesting to see. You think now, like these big companies. I mean, at the end of the day, they are running the country. Apple, Facebook, Twitter, things like that. I mean, they have basically control of all the information. But that's a whole other conversation for another day. What else did you? Anything else this week you wanted to talk about?
No, I think we hit everything that we were going on about. I think the only thing that I'm, still uncertain, which everybody is Russia Ukraine. That's it. Obviously, it's a horrible situation. We all want it to end as soon as possible. But as far as the economic recoil from it, oil prices are going to be what they're at. If Russia does completely shut us off from everything, and they make the call to shut everybody off, how is that going to affect everything? And I was talking to one of my friends about the whole situation. Honestly, the only people losing out of this are citizens of the entire world. The politicians, nobody's getting affected on that level for gas prices going up or inflation going up. They've got so much money, it's not going to phase them at all. So it's really just the rest of us who are trying to live paycheck to paycheck who are suffering, and it really stinks.
Yeah, that's the
So
unfortunate reality. It's always, the people at the top never going to feel it.
yeah. And so for those of you who are out there, before we close this off, everybody out there, yes, it stinks. It's very hard to get through. If you did not go through the 2008, 2009 housing crisis, then, we have, those of us who have been through it know we'll get through it. But the best way is invest, 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 because when you're invested and you've got money and you've got yourself out of debt and you have a real estate is a great one to get into to play a hedge on both sides. Cash flow generation. If you've got cash flow generation and multiple sources of income, you'll get through this. Like now I'm actually excited that the stock market's down because I have cash flow coming in that I can invest. So it's going to stink. It's going to be hard to get through. Yes, things are going to go up. It's going to be harder to save money. Just work through it, fight through it. You'll get there. And if you invest and invest in real estate, you will be fine.
Definitely, yeah, I agree with all that. And bear markets are where the fortunes are really made. I mean, be greedy when others are fearful.
Absolutely.
This
Because you
guy up
think,
here said.
yeah, and think about just the numbers. With Tesla at $1,200, it's now down. It hit 700. So, looking at the future, even if Tesla hit $2,500 at the end of 2022, you would have only doubled your money. But now, if you invest in Tesla at this price, you'll 4x your money. So, just think about, that's why they say fortunes are born during bear markets, because during bear markets, everything is depressed, and we will eventually get back to a bull market where all that money that you invested when we were going bear is going to be magnified significantly.
Definitely. Well, thank you all for joining us. Don't forget to like and subscribe. And Tim, where can everybody find you?
Yeah, but you can check me out on my channel, Oracle Investments, and I'm also on Twitter at OracleTim1.
Awesome. And I'll link those below. All righty, everyone. We'll catch you on the next one. This is Vinny from the Investment Club. See you next time.